That leads us to another issue is if you did it without planning, then the rental income will be a lot less than you're proposing in your scheme. So that's one issue. And I think that determines whether you're going to be able to refinance and pull out the money to pay the investor's capital back.
So do you fancy doing an HMO deal in Derby where you can convert a 2-bedroom terraced house into a 6-room HMO for 75 grand investment, and guess what? You'll get all your money out at the end. Well, that's the deal that Claire Goodhall pitched on the hit Sky TV show Property Elevator, which goes out on Sky Channel 186. Property Elevator is a Dragon's Den style pitch show where property entrepreneurs come along with their property deal and they're looking for funding from us property angels. Now, if you're new to this channel, make sure you subscribe, hit the bell icon. We put out plenty of videos each and every week. Also, make sure to watch all the videos in the Property Elevator playlist because you'll learn plenty on how to pitch for investment and also how angel investors analyze those deals. Let's meet up with Elizabeth Warburton, who meets up with Claire Goodhall.
Hi Claire, welcome to the show.
Thank you.
Tell us where you've come from today.
We've come from Wolverhampton in the West Midlands.
Brilliant. And tell us then a little bit about the deal that you've brought for our angels.
Well, we found a 2-bedroom terrace property in Derby, just under a mile outside of the city centre. And we're hoping to convert it into a 6-bedroom HMO.
Lovely. And how much investment do you need then for the project?
We need £75,000 today, which will pay for the purchase of the property and for the first instalment to the builders.
And what is the potential profit for the angels?
So this is an all money out deal. So we're looking to refinance and get all of our investment out. And we're offering the angels 6% interest on their investment.
Okay, well, good luck.
Thank you.
We'll send you in shortly and I will have a little chat to you when you get out.
Thank you very much.
So we have Claire coming up now. She has got a house in multiple occupation up in Derby. She's looking for £75,000 for 6%. Perhaps it's a loan deal, I think, but let's see.
Hi, I'm Claire Goodhall. I currently run a GP federation in Worcestershire, but prior to that, I worked for HBOS for 14 years, starting in mortgage administration for existing mortgages, moving into intermediary mortgage sales, and then finally I worked for Collies, Valuation Surveying Services. My husband Rob is my business partner. He's a trained architect, but in 2015, he went on to work for house building companies. So he now does their design management. So he's the technical part of our partnership. He understands planning and building costs. The deal that I'm bringing to you today is a 2-bedroom terrace property, which is located just under a mile outside Derby city centre. And we're looking to convert it into a 6-bedroom HMO for 7 people. So it will have 4 double ensuite bedrooms and 2 studio apartments. We've purchased the property already, and that purchase price was £160,500. We've had a quote from builders, which is in your pack. They are HMO specialist builders, and they've quoted us £140,000 for the build. We've got finance in place, development finance in place of £274,500, and £154,000 of that is for the building, so that includes a 10% contingency. So the GDV is £440,000, which is 9.5 times the gross rental income of £46,200. So today I'm here asking for £75,000, which is the purchase cost of the property and the initial builder's drawdown of £20,000. For that, we will offer you 6% interest. However, as we're new to property development, we thought we'd like to bring you a really low risk deal because we're looking actually for a long-term relationship with an investor. We appreciate that finance is our kind of key enabler for growth, and therefore we want to build a trusting relationship with somebody that will invest in us in the future and help us to grow and learn as well.
ROI of 100% looks good.
Yeah.
The return of 6 doesn't. Yeah, I mean, you say low risk, but effectively you're asking for the equity in the deal.
Yeah.
Which means if this goes wrong, it's our money at risk, not yours.
Yeah.
And therefore the return needs to be much better.
Paul's absolutely right. You know, to offer a 6% return at the early stages of your career where you're not experienced and you're expecting the investor to put in the experience as well as the money,
Yeah.
I think you need to be offering far more. So I think you need to be looking at sort of 10% plus, probably more like 15 to 20% return
Okay.
on a loan basis for your first few deals. Once you build up your track record, you can then start to drive that interest rate down. I think you're asking a lot with you being a newbie. and you're asking that from experienced people who bring the experience as well.
Yeah.
So I'm definitely not going to be interested on this deal if that's all that's on offer.
Okay.
So yeah, I'm just going to say it's not one for me today, I'm afraid. But I like you. I think it's great that you're on a journey. It's great to see you getting yourself educated first so you don't make mistakes. Getting the right network around you. You've got a couple of deals already. Brilliant.
Yeah.
Keep going, keep learning, keep getting stuck in, and well done for coming today. Being so new in your journey, I think it's a great testament.
Yeah. I've got the point.
Good advice there, thank you.
Okay, there's some issues with the deal structure. Hayley, do you have any? You're familiar with the area.
Yeah, so just so 6-bed HMO, 7-person. So you're going to need planning permission for this.
It's permitted development.
Well, it goes off the number of people that occupy, not the number of rooms.
Right, okay.
Yeah, so if you put in 6 people in, great. You can go from C3 to C4, no issues at all under PD. So you would need planning permission for this deal. In terms of the area, I know that some parts of Derby do have Article 4. Have you checked that out?
Yes, we have checked. We've actually used a sourcing agent to find the property for us.
Okay.
Are you struggling to find your next commercial to residential conversion project? Well, over the next 2 years, virtually every UK bank branch will close. Banks are fabulous buildings in prime locations, and thanks to permitted development rights, they're really easy to convert to alternative uses under a light touch planning regime. My team have put together a list of over 500 UK bank branches which are poised for imminent closure. And for a limited period only, you can download this list absolutely free. Your next commercial property project is on this list, so download it now and enjoy the rest of the video.
Development finance is an area that I'm fairly familiar with.
Yeah.
Just talk me through the background to the acquisition, okay, how that was structured, what debt is on there at the moment, and you mentioned when you were doing the pitch that you had a facility of, I think, 274,500.
Yeah.
What does that look like now, and how do those releases happen to you?
Yeah, so the amount that we'll draw down initially is 112,345, which is minus the fees for the bridging finance.
Okay.
And then it's 154,000, which will be released for the development costs. And the quote we've had is 140.
Okay.
And that's a 12-month plan.
It's a 12-month plan.
At 1% interest, yeah.
And then the end value of 440,
Yeah.
that's a commercial valuation
Yeah.
rather than a bricks and mortar
Yeah.
valuation. Okay. Has the lender that you're using, have they had a valuation yet of the property?
That's been instructed, but it hasn't happened yet.
The majority of lenders that I know in this space, the bridging lenders and development lenders, will only ever look at a bricks and mortar end value of the property rather than the commercial investment value of the property on completion. This is not something that I would be prepared to invest in. But look, I wish you all the best on your journey.
Thank you.
Yeah, I think the way this is presented is a shame because although you own the property, the deal you've presented is that we're effectively buying it off you in a partnership. So the ownership of the property isn't adding any value. It's just the fact it's secured. And therefore, in a sort of JV type situation, we'd have to be looking more at something along the lines of 50-50 at the very least to justify it. It's not a big deal. It's, the returns are, if you put in 75 grand, you get about 75 grand back. And the second charge offering doesn't add that much value, in my opinion, because if this goes pear-shaped, there won't be any equity left. Sadly, like my friend Scott's hairline, I'm going to have to run away from this one.
But at least I'm proud of my hairline, unlike Ranjan.
Well, I don't like to take a haircut on any deal. One of the issues here is that whether you get a commercial valuation or not, it depends on whether you do this with planning permission or not. If it's not with planning permission, then it's going to be bricks and mortar. So if you are going to keep it under the planning radar, then it's likely to be a bricks and mortar valuation. But if you want to do 7 rooms, then you're going to have, 7 people, then you have to do, and studios, then you have to do planning anyway. So that leads us to another issue is if you did it without planning, then the rental income will be a lot less than you're proposing in your scheme. So that's one issue. And I think that determines whether you're going to be able to refinance and pull out the money to pay the investor's capital back. So I don't think this is for me, because I don't think this is an investable deal where we'd basically get a decent return.
Okay, so in terms of the expected valuation on a commercial valuation, I've got lots of 6 beds and they have been valued commercially. So I think it depends on the demand, the area, and good solid comparables.
Yeah.
So I don't necessarily think that's an issue. The issue here is the offer that you've offered us.
Yeah.
Isn't a great investment for us, but this is actually a good investment for you to do. Raise the money, friends, family, that are happy to kind of accept that 6%. We could do so much better with the money that we'd be putting into you. So, and we'd be helping and mentoring along the way as well. So this particular deal is not for me. However, I think you should definitely explore other options, cheaper cash, than what we're willing to offer, because I'd want at least 15 to 30% if you can't offer that with this deal.
Okay.
So for
Thank
that
you.
reason.
Thanks for all your help and advice. It's been great speaking to you all.
Thank you.
Thank you.
Personally, I think she's got a lot to learn.
She's got a lot to learn. She's naive. That's the point of this show, though, so we can educate people and back the people we think have got what it takes. But we need to see the returns reflected where our value is reflected in what we're being offered.
I understand that, but I do think that people to come into the room, they should have a level of understanding and knowledge to be able to pitch successfully.
But she's come in asking for the mentorship, the partnership. She wants the education and someone to hold her hand. Her fault is that she's offered too low.
I mean, it's a good. I mean, Scott's got a good point though. If she'd have watched previous seasons, she would have got an understanding of the expectations of what we want from a deal.
Yeah, I agree.
Claire, let me give you some advice. Don't come into the property elevator and say you're going to give a 6% yield. The Angels can get 6% probably on their millions of cash they've got already, and they're not having to take a risk to get it. They may not be getting 6%, probably 4% at the moment. You know, you've got to come in and share the deal. The one thing the Angels like though, which you did say, is that you already own it. You already bought it, you've already got the funding. So I can understand why you're being sort of a bit mean and a bit cautious, but actually that doesn't help you with the Angels at all, as you saw.
So how was your experience in the room?
It was really good. Although I didn't get the money that I asked for today, I had some really good advice from the Angels, so that's been really helpful and that'll help me with my journey.
Baker Street Property Meet is the UK's largest and #1 property investors networking event. The property market is going through monumental change right now, and at Baker Street Property Meet we aim to keep you up to date with the latest tips and tricks and insider tactics to help you keep on top of your property investing game and succeed in these troubled economic times. The Baker Street Property Meet is fundamentally about networking, because it's not what you know, it's who you know. And at Baker Street we aim to connect you with the people to make your property journey a monumental success. There's no better place to be to further your property investment journey than the Baker Street Property Meet. So make sure you're here, you're connecting with myself and Andrew Roberts, our expert guest speakers and 300 passionate property people each and every month. See you at the next meet. Get your spot at bakerstreetpropertymeet.com.